Welcome to the Deep Dive. We're the show that gives you that shortcut to being genuinely well-informed. It's really designed for you, our listener. We take, stacks of dense material reports, articles, and we boil it all down, get you those key nuggets, those aha moments without you feeling completely overwhelmed. So, today we're diving into the global casualty insurance market. And just to be clear, we're talking about insurance that covers, liability. Yeah. Legal liability for businesses, individuals, things like injuries to others, damage to property.
Right. Think product liability, professional malpractice, general business liability, that kind of thing.
Exactly. So our mission today is to unpack the big numbers, maybe find some surprising facts, and just understand the trends shaping this really vital global landscape.
And yeah, all the data, all the insights we're sharing today, they come straight from a report by Cognitive Market Research. It's called the Global Casualty Insurance Market Forecast 2021-2033 Insights. It's pretty comprehensive. So we're here to walk you through the core findings, focusing on what really jumps out.
Okay, let's get straight to the biggest headline then. The global market, it's seen some really impressive expansion. It started at just over, $1 trillion back in 2021?
Yeah, $1,050.83 billion to be precise.
Right. And it's projected to more than double, get this, to over $2.1 trillion by 2033.
That's $2,106.59 billion. It's huge.
Driven by a pretty solid compound annual growth rate, the CAGR. Nearly 6%.
5.967%, yeah, almost 6%.
So, what does that really tell us, that kind of sustained growth?
Well, what's really insightful, I think, is that it's not just some temporary spike, right? It paints a picture of really consistent, sort of deep-seated demand, that nearly 6% CAGR. It says a lot about, an economy where businesses, individuals, they're increasingly aware of liabilities.
And the need for protection.
Exactly, the importance of robust protection. It tells us that as the global economy grows and changes, well, so do the risks that need managing. So you see it go from that trillion, roughly, in 2021, climbing to about 1.3 trillion by 2025. And then accelerating up to that projected 2.1 trillion by 2033. It really just underscores the market's fundamental strength, its resilience, globally.
Okay, so that's the big picture. Now, if we zoom in a bit, North America, the report clearly flags it as a leading region. It shows the market there almost doubling too, from around $420 billion in 2021 to over $813 billion projected for 2033.
That's right, $420.333 billion up to $813.567 billion.
So what's fueling that and what seems like a pretty mature market already?
Yeah, that's a really good question. And the report kind of highlights a shift. Sure, traditional liabilities are still there, but we're seeing big drivers in newer areas, more complex stuff.
Like what?
Think about increasing exposure to cyber risks. That's a huge one. Environmental liabilities, and also the expanding scope of professional indemnity coverage, things like that. For instance, the U.S. obviously is a massive driver. It climbs from about $340 billion.
$340.049 billion.
Right, thanks. Up to over $645 billion by 2033. And that growth, it isn't just, existing businesses buying more. It's fueled by new regulations, emerging risks from the digital economy. All sorts.
And it's not just the U.S. driving North America, is it? The report mentions others, too.
Oh, absolutely. You look at Canada, it shows a really significant surge. Goes from just over $50 billion
$51.953 billion
to nearly $115 billion over that same period.
So more than doubling.
More than doubling its market size, yeah. Which suggests, maybe a rapidly modernizing economy there, perhaps a growing focus on managing liability.
Interesting.
And Mexico's not far behind either. It expands from roughly $28 billion, $28.33 billion, to over $53 billion, $53.37 billion. So yeah, while these are already big economies, the growth rate signals this evolving risk profile and maybe a deepening of insurance penetration too.
Okay, let's shift gears. Across the Atlantic to Europe holds a very significant share too, right?
Definitely.
The overall growth is substantial, moving from just over $300 billion in 2021.
$303.69 billion.
To a projected $586 billion by 2033. So given Europe has more, let's say, established markets, what's contributing to this steady but maybe varied expansion.
Europe's kind of fascinating. It's a real blend. You see solid, consistent growth, sure, but it's driven by a mix of things. You've got stringent regulations, which often mandate certain coverages.
Right.
Plus, there's this increasing awareness among businesses about their legal obligations. So countries like Germany, a real economic powerhouse, they're set to grow from around $51 billion.
$51.87 billion.
It's $93.945 billion. France expands from about $35 billion, $35.623 billion to $76 billion, $76.504 billion.
UK too.
UK shows strong growth as well, from nearly $38 billion, $37.961 billion to over $67 billion, $67.689 billion. These are mature markets, yeah, but they're definitely adapting to new challenges like climate-related liabilities, increased litigation, that sort of thing.
And the report also points out some countries with maybe more modest growth, in absolute terms anyway, like Sweden or Denmark.
Exactly. You've got countries like Sweden, Denmark, Switzerland, Luxembourg. They show growth, but it's more modest in billions added compared to the giants. So Sweden, for example, moves from around $9.5 billion, $9.475 billion, to just over $14 billion. $14.241 billion.
Okay.
And this often reflects a highly mature market, maybe more saturated. Growth there might come from premium increases or, very specialized new types of coverage rather than just loads of new businesses buying basic policies.
It speaks to the diversity across the continent.
It really does. Yeah. And what's also interesting is that the rest of Europe category, when you lump those other countries together, that sees a pretty substantial surge too, $63.623 billion to $142.171 billion. So it highlights broad-based growth, not just in the biggest economies.
Right, got it. Okay, let's turn our attention now to Asia Pacific, a region we often associate with really dynamic economic expansion, and their casualty insurance market seems to reflect that. Total growth from almost $200 billion in 2021.
$196.506 billion.
To a significant $435 billion, $435.433 billion, projected by 2033. So what's really driving this huge growth in APAC? Is it just the sheer volume of economic activity?
Well, that's part of it, of course. But this is where we see some really dramatic shifts happening. Beyond just the overall economic expansion, the report points to things like rapid urbanization, massive infrastructure development, an industrial boom across many of these nations.
Right, which naturally creates more risk.
Exactly. It leads to increased demand for coverages like public liability, product recall insurance, professional indemnity. Look at China, for example. It jumps from over $61 billion, $61.585 billion, to nearly $129 billion, $128.54 billion.
Wow.
And India, a truly surging economy, goes from around $31 billion, $31.362 billion, to an impressive $77 billion, $77.42 billion.
And it's not just China and India, is it? The growth seems pretty widespread across APAC.
Precisely. Japan continues its steady climb from nearly $48 billion, $47.79 billion to over $99 billion, $99.279 billion. But yeah, we also see really significant contributions from South Korea, Australia, Singapore, and Southeast Asia as a whole. That region nearly triples, from about $21 billion to over $51 billion.
Triples.
Yeah. So it's not just about economic size. It's also about evolving legal systems, growing middle classes, and increasing focus on corporate governance. All these factors fuel demand for casualty insurance.
Makes sense. Okay, moving south now to South America, another region showing consistent, pretty robust growth.
Yeah.
The overall trend there is from around $71 billion in 2021, $71.457 billion, to a projected $159 billion, $159.469 billion by 2033. What's the story behind this growth?
Here, you often connect the growth to increasing foreign investment, a burgeoning industrial base, expanding infrastructure projects.
Things that bring new liabilities.
Exactly. They all bring new liabilities and a greater need to transfer that risk. Brazil is the clear leader there, growing from about $24 billion, $24.338 billion, to over $52 billion, $52.596 billion. Argentina also shows strong progress from nearly $10 billion, $9.754 billion, to over $23 billion. $23.152 billion. And Colombia from just under $6 billion, $5.974 billion, to over $14 billion, $14.158 billion. It's a really clear sign that as these economies develop, they're adopting more sophisticated risk management practices. Peru and Chile are also mentioned as growing.
Right. Let's move to the Middle East next. Shows a steady rise, the report says, expanding from nearly $38 billion in 2021, $37.83 billion, to over $63 billion, $63.83 billion projected by 2033.
Yeah.
What developments are driving growth there?
In the Middle East, a lot of the growth seems linked to, well, economic diversification efforts, moving beyond just oil, for example. Also, large-scale development projects, new cities, big tourism hubs, and just a general increase in business sophistication. Saudi Arabia, for instance, is a significant contributor. Grows from nearly $12.5 billion, $12.473 billion, to over $20 billion, $20.432 billion.
All right.
And we also see countries like Turkey, the UAE, Egypt, Qatar, all adding to this consistent expansion. It seems to be driven by a mix of new construction, growing trade, and evolving regulatory environments, too.
Okay, and finally, let's touch on Africa. An emerging market, definitely, but with significant potential noted. Its casualty insurance revenue rose from around $21 billion in 2021, $21.016 billion, to over $48 billion. $48.241 billion by 2033. What makes Africa particularly interesting here?
Africa represents a really fascinating growth story. It seems driven by things like rapid urbanization, increased foreign direct investment, and just a growing recognition of the importance of formal insurance coverage as economies develop.
Right.
Key markets like Nigeria, they're projected to more than double, going from about $4.5 billion to over $10 billion, $10.063 billion.
Wow, double.
Yeah. And similarly, South Africa sees strong growth from over $7 billion, $7.24 billion, to more than $16 billion, $16.161 billion. It really highlights the burgeoning opportunities and the increasing need for risk management solutions as the continent's economies mature and integrate more into the global landscape.
So just to kind of wrap this section up, looking at all these regions, the report really does paint this vivid picture, doesn't it, of growth, market share, strategic potential all over the world.
Absolutely. It connects the dots from local drivers to this overall global expansion.
Okay, so to recap then, what we've really unpacked today is this picture of consistent, robust growth in the global casualty insurance market. That remarkable nearly 6% CAGR isn't just some abstract number. It tells a story, right? An industry that's thriving, expanding towards that huge $2.1 trillion mark by 2033.
Driven by really diverse, evolving risk landscapes across every region we looked at.
And hopefully, understanding these specific numbers, these regional trends we've discussed, provides you, our listener, with that crucial shortcut. Helps you feel genuinely well-informed about this really vital sector.
Right. And this consistent global growth, combined with those specific regional shifts we explored, like, cyber risk focus in North America, rapid industrialization in Asia, emerging market development in Africa, kind of leads us to a fascinating question for you to maybe ponder.
Okay.
Given these shifts, how do you think global businesses will need to fundamentally rethink their liability strategies over the next, say, decade? I mean, what new types of coverage might become essential? How might regulations need to adapt to this really dynamic risk landscape that's unfolding?
That's definitely something to think about. Food for thought until our next deep dive.
Welcome back to the Deep Dive. We're here again digging through the sources to pull out the stuff that really matters, just for you. Today, we're jumping into the global casualty insurance market. And really, this isn't just policies and fine print. It's a sector that's alive, constantly shifting with global events and new kinds of risks popping up. Our whole mission here is to give you that shortcut, get you right up to speed. And we're focusing on this, frankly, pretty impressive growth forecast from Cognitive Market Research. They're saying this market could go from, just over $1 trillion in 2021, put it more than $2.1 trillion by 2033. That's almost a 6% compound annual growth rate. That CIGR, it's not just a statistic, is it? It signals something bigger, like a fundamental change in how businesses everywhere are thinking about and managing risk. I mean, the market basically doubling in roughly a decade. That tells you risk management is becoming absolutely core. Okay, let's unpack this.
Yeah, and what's really fascinating here, I think, is looking beyond just those big numbers. Impressive as they are, we really want to get under the hood, understand the core things driving that growth, but also the big challenges, the hurdles the market's facing, and, of course, the new trends that are genuinely reshaping its future.
Yeah.
By the end of this, you should have a really solid but, manageable grasp of this whole industry and why it's so important for the economy.
Right, that global dynamic you mentioned really frames it. So, okay, what are the main things actually pushing this expansion forward? I'm guessing the growing complexity around workplace risks, public liability, that kind of thing must be a big piece.
Oh, absolutely. A huge piece. Just think about how intricate workplaces and public environments are now compared to even 20 years ago. You've got more complex workplace injuries happening, trickier third-party damage claims, product liability issues that are frankly more complicated and crucially more expensive when they happen. So this really pushes businesses to proactively look at their casualty coverage, maybe enhance it. It's not just box ticking anymore, it's strategic financial protection.
Yeah, yeah. And it feels like that increased awareness sort of feeds into what regulators are doing too. Like governments see these growing risks and step in.
Exactly. That's a clear trend we're seeing globally. More stringent regulations, more legal mandates around liability insurance. Governments in lots of places are making it compulsory for more types of entities. Big companies, sure, but also individual professionals, even organizers of big public events. So this regulatory floor provides this kind of constant baseline demand for casualty policies. It shifts them from nice to have to must have.
And it's not only compliance driving it, right? It's also just the sheer number and type of businesses now. That boom in the corporate world, especially with small and medium-sized businesses, SMEs, that's widened the customer pool massively. And we're not just talking quantity, but the kind of businesses too. Tech startups, gig economy platforms, specialized consultants. These aren't your old school operations. They bring new liability questions, often digital ones, pushing insurers to innovate with policies, stretching the market way beyond the traditional stuff.
That's a really critical point. And sort of underlying all of that is this fundamental shift in awareness. Businesses themselves are just getting smarter, more conscious of the legal risks, the financial hits they could take from lawsuits, environmental issues, property damage. This more proactive stance, this heightened awareness, is directly pushing companies to get comprehensive casualty policies sooner rather than later. It's less about reacting after something bad happens and more about planning ahead.
Okay, so we've got these strong forces pushing growth. But like any market, there's got to be friction, right? What are the big challenges? The roadblocks that the global casualty insurance market is grappling with, this is where it gets tricky for people navigating it.
Well, one of the most obvious ones, and it's always there, is just the cost, the premiums, especially if you're in a high-risk sector, like, say, construction, healthcare, heavy manufacturing. The cost of really good comprehensive coverage can be pretty steep. It can genuinely make it harder for some businesses, particularly smaller ones maybe, to afford the protection they need. A real barrier sometimes.
That's a big one. And when you mentioned complex claims earlier, is that about the sheer number of claims, or is it more about the legal tangles, determining who's liable, especially when multiple parties are involved?
It's often the latter, the legal complexity. You get situations with multiple parties pointing fingers, maybe crossing different legal jurisdictions, or completely new kinds of liability nobody's dealt with before. So the investigations can drag on, the legal stuff gets incredibly complicated, and the whole settlement process just takes ages. And from a customer's point of view, seeing or hearing about those long, drawn-out processes can really erode trust. It might even put them off getting insurance in the first place, even if they really need it.
And does that complexity then play into the pricing pressure you mentioned? Does it make it tougher for insurers to figure out the risk accurately and price things competitively, or is that separate?
No, they're definitely linked. This market is also known for really intense competition. You've got lots of insurers offering products that, on the surface, look quite similar. So that naturally squeezes profit margins, pushes prices down, and that intense competition, combined with the challenge of pricing these really complex or new risks accurately, well, sometimes it can unfortunately mean service quality suffers a bit as insurers try to cut costs or just become overly cautious.
Okay, let's zoom out a bit then. You mentioned limited penetration in developing economies as a hurdle. What's driving that, beyond just people maybe not knowing about insurance?
Yeah, it's a mix of things. Often you have lower levels of sort of insurance literacy generally. People might not fully grasp the value proposition. Then you can have specific regulatory hurdles in those countries that don't quite mesh with how global insurers operate, making it tough for them. And a really big factor is the structure of the economy itself. Lots of informal employment, many small businesses that aren't officially registered, they don't have the kind of formal records or verifiable income streams that traditional insurance models rely on. It's hard to fit them into the system.
Right, those are all significant challenges. But, okay, despite all that, the market's clearly not standing still. We're seeing some really interesting trends shaping where it's heading.
Oh, absolutely. It's very dynamic. And one trend that's really making a difference is how technology, specifically legal tech, AI, is being integrated into claims processing. And this isn't just hype. It's genuinely making the process faster and more efficient, especially for those complex liability claims we talked about. Think about AI. analyzing mountains of past claims data to help predict outcomes, or legal tech tools automating things like compliance checks or even drafting basic legal docs. It frees up the human adjusters to focus their time on the really tricky cases needing that nuanced judgment.
Yeah, that sounds like a potential game changer given the complexity problem. And alongside tech like that, cyber liability insurance is booming, right? With all the digital threats we hear about data breaches, ransomware, these sophisticated attacks, it seems casualty insurers are having to step up and cover these newer risks.
They absolutely are. It's a massive growth area as things like ransomware as a service or supply chain attacks become more common and, frankly, more damaging. Many traditional casualty insurers are expanding their offerings. They're moving quickly to include cyber risks because, well, in today's world, it's a critical exposure for almost any business. It wasn't even really on the casualty map a decade ago.
Makes perfect sense. And what about bundling? Seeing casualty insurance packaged with other things like property or business interruption cover.
Yes, that's another strong trend. Insurers are increasingly putting together these sort of value-added packages, bundling casualty with property, with business interruption. The idea is to offer protection against a wider, more holistic set of threats. For a business owner, that means simplicity, one policy, one contact point, and often it's more cost-effective too. It's an appealing proposition.
Right, trying to provide that complete safety net. And lastly, you mentioned it focus on customized risk management services. What does that look like?
Yeah, this is about moving beyond just selling a policy. Insurers are increasingly offering services alongside the coverage. Things like specific employee safety training tailored to the client's industry, doing detailed risk audits of their operations, providing ongoing advisory support. It does two things. It builds loyalty, positioning the insurer more as a partner, but crucially, it also helps actually reduce the chance of a claim happening in the first place. So insurers become risk advisors, not just claim payers. So you've tied all this together, connect it to that bigger picture. It's really clear the global casualty market isn't just getting bigger, it's fundamentally changing, it's evolving. And that evolution is being driven by this potent mix of technology, changing regulations, and what customers now need and expect when it comes to risk. The whole landscape of liability protection is dynamic, and that creates some really significant opportunities, but also challenges for anyone connected to the sector.
So what does this all mean for you listening in? Well, it means realizing that these drivers, these challenges, these future trends, they're all interconnected. They feed off each other. This isn't some dusty corner of the financial world. It's a really critical market, maybe one we don't always think about, but it underpins so much workplace safety, business resilience, you name it. Getting a handle on these dynamics, it gives you an edge, really helps you understand the forces shaping our economic landscape.
And, this really raises an important question, something maybe to think about after this. As technology just keeps advancing at this incredible pace, and society itself keeps shifting how we even perceive risk, how will our basic understanding of casualty in the insurance context continue to change? What totally new kinds of liabilities might pop up in the next 10, 20 years? And, maybe more importantly, how quickly and effectively will the insurance industry adapt to cover them?